Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. If you watched my last video, which was looking at CAGR stocks over 100%, you would know that we created a screener, a stock screener, to find potentially relatable stocks that could move in the same trajectory as those stocks. The parameters are in my last video. I'll do a little quick screen share before we start. We're going to be reviewing 157 stocks. However, it will be kind of rapid fire. If the stock is losing more money than it makes, done. I mean, we'll look at the history and see if it's a known problem or it's been going on, or maybe it just was negative that quarter. We'll make that determination, then we'll move on to the next one, and we'll put any good ones off to the side so we can take a little deeper look at those ones later. So without further ado, thank you guys for 500 subscribers. You guys are the best. I hope I'm creating value. I hope I'm showing you how you can find stocks to swing, to have long-term, to accumulate for many years, and how to just determine, like what makes a good stock, what makes a bad stock, assets, liabilities, debt, etc. Anyway, without further ado, 157 stocks we're going to zoom on through. I'm going to go ahead and share my screen. All right, you guys, here is the Finviz parameters that we created from the high CAGR stocks over 3 years. So those ones were tickers DEN, AMR, and PMTS. You can find that on my last video. But for now, what we are going to do is we're going to go ahead and go through these and see if they have potential to move like crazy. There's 8 pages, so that's not too bad. However, this might be a really long video. We'll just figure it out along the way. I'm going to open 5 stocks at once, and we'll go from there. So this first one is ACCO. And I like to look at the bigger picture first. Okay, so this stock before has gone, whoa, it was $25 before. Looks like momentum's picking up. Let me just reset this back. Let's look at the numbers. They make 1.9 billion. They lose 14 million. Considerable debt. Momentum is going very well in our favor. Money flow is going up and RSI is going up. Things we all like. Sales have been kind of flat. So, and their earnings per share just went negative. Going on down. Okay, we're going to look at their revenue. 1.5 bill, 1.9 bill, 1.9 bill, 1.9, 1.6, 2 bill, 1.9, 1.9. They're not profitable. I mean, given the momentum where it's at, let me see. So what I'm going to look for here is just my quick calculation to see if this stock does have enough juice to potentially run. So we're going to do the 1,910,000 minus the income of 14,200,000. We're going to add cash and remove debt. So they have 62, so plus 62,200,000 minus total debt of 996,500,000. And we're going to divide this by the shares float divided by 91,300,000. Share price of $10-ish. Right now it's at 5.6. So it is undervalued, but I don't think it is, going to get us those amazing CAGR numbers. I do like this one, but I'm just going to note down here. Right here. ACCO, current is 560. Fair is 10.1050. So, I mean, decent one, but you know, it looks like it's about to make a long-term reversal. So next resistance is 611 and then 728. So just noting that one down. AGS. This is gambling. So let's look at the bigger picture here. All right, it's kind of ready to roll. PE is high. Means overvalued. Good gross margins, good operating margins. Sales are doing very well. Earnings per share are reversing. Let's just run the numbers on this one really quick. 319 million, 0.8 plus they're profitable, 4.2. All right, let's add cash, remove debt. Let's look at their revenue. They went from 166 to 11, 285, 304. Wow, chopped back down to 167, 259, 309. Okay, they're doing really well. They're back on track. Balance sheet, look at the cash of 37 million, so plus 37 million. 0.89, and we're going to remove the total debt of 556. Whoa. This is a pass. We're moving on this one. What's their assets? 684, liabilities 635. Oh my god, that's so close for comfort. What do they do? Oh my gosh. Why are they... What's going on? I mean, we're gonna pass, but I'm so baffled by this one. We're gonna pass. AMCX, AMC Networks, a lot of debt. You know what? For debt, we're going to go back and we're going to edit this to be... Let's do... Custom is 3. Is that 3 over? -3? Is that a thing? I don't think so. Let's see. Debt to equity, we want it to be, I guess, over 0.4. Over 0.4 is good. There we go. We're down to 86 stocks. Okay. We looked at ACCO. We looked at AGS. Now we're on AMC. Okay. AMC. It looks very undervalued in the future. However, right now it does not. Let's see what's going on here. Wow. Okay. You guys see this? All-time low was just hit. Is this company doomed, or is there some saving grace here? EPS is going down. Sales is going up. Shares outstanding is going down. Okay, so let's run the numbers on this one. I like this so far. 3.1 billion plus positive. They're profitable, you guys. Let's look at that cash. Let's look at the revenue. Revenue is growing very nicely. Great. Gross profit is flat. Gross profit's been pretty flat for a while. Net income, they're positive. They used to be really positive. Balance sheet. Wow, they have a lot of cash. Plus 930 million in cash. Total debt is 2 billion. Okay, so minus 2 billion 350 million 690,000. 2,835,690,000. Correct. Okay. Divide this by 27,590,000. $43 stock price at trading at $12, $13. I like this because the company can continue to kick butt while it's turning around. Let's go see if the hard times are over. Let's see if also if institutions are buying. Intel, AMCX. Institutions own 89%. I'm going to guess it's higher now because this is the all-time low. People would want to buy, I think. Oh, it's low, 71%. So institutions are selling quite a bit. Finviz shows 1% selling. I think it's quite a bit more than that. Wow, yeah. BlackRock, did they? Vanguard purchased more. So not really, I like to use those two as a gauge, and I'm not really seeing them capitulate. So I kind of like it. Are insiders buying? No. Okay, is the worst over? Let's look at their total debt. Their total debt used to be 2.6 bill, 2.8 bill, 3.1 bill, 3.1 bill, 3.1 bill, 2.8 bill, 2.8, 2.8. They're paying off 30 million at a time. I need to pay off more than that. Yeah, so I like this one. AMCX current 12.9 fair 43. Yeah, I mean, these aren't ones that I'm like super cheesing over, but you know, they're looking good. So we just looked at AMCX. Next is Abercrombie and Fitch, then APPS, then ARCE, ATSG, and then Baines. All right. Abercrombie and Fitch, big momentum move. Sales have been really flat. Earnings per share is all over. Shares outstanding is going down. The stock is currently running. I mean, you could have got in at 13 and ridden it to 34. I'm just not optimistic. I'm so torn on this one. I don't know if I should run the numbers for you guys or not. Let's just go down. Total revenues have literally been almost flat for 6 years. Gross profit, almost literally flat. Net income's kind of all over the place. Total assets, 2.7 bill. Total liabilities, 2 bill. I just don't. With sales flat like that, I just don't know. They have a new CEO. I don't know if that's going to move the needle for me. We're going to have to pass on Abercrombie and Fitch. Apps, I got in at $1.20 and I went to 100. I got shaken out when the pandemic hit, unfortunately. Did this ever close the $7 gap? Low 776. It might have. It just might have. Long-term momentum. Look at this. Money flow. Wow, look at the money flow. Just, oh my God. Oh my God, it just pounded in here. And then it went to $100. I have a great video on that one, I think. Momentum is turning. Let's look at their numbers. I mean, shares outstanding going up, sales kind of coming down, earnings per share kind of going down. Growth this year is not looking too good. Wow, the CEO is just getting money. Yeah. Let's run the numbers. I mean, we can see 665.9 plus 16.7 million in income. Let's look at their cash. No cash. They have short-term investments. Total debts 410. Ouch, 410.52. No, this is not looking too good. $2 stock. I mean, one of the distinct things about apps here, you guys, we're not seeing that same type of money flow that we were seeing here. You see the stock price right around $8, $9 here? Look at the money flow. They were just dumping money into it. Now down here, it's like, look at the RSI strength. Just insane. Down here, it's like, I think this one could have a really good turnaround from 10 maybe to 30. That's a 200% move. That's great. With just the calculations of the $2 price target, I don't know how I feel. What are institutions doing? It says institutions own 70%. That's older data. New data shows it's 77%. And we can see right here, you know, there's still interest. Vanguard added some, BlackRock, same, like they didn't add or sell. Looks like Vanguard did sell some here actually. I mean, it's all, I feel like it's all a momentum move at this point. They're making 665 million with 16 million in income, but they're forecasting for losing. Let's look at their quarterly. 2023 first quarter was 140. 2021 first quarter was 184. So that's a decrease, big decrease. Yeah, I don't know. I think if it's a momentum play, I think it's fine. I don't know. Like in the future, it looks undervalued, but right now it looks overvalued. So I think this forward PE is looking at the 46% growth next year. If it did have the 46% growth next year, I think that would make this a little bit more attractive to me, but right now it's not. They have quite a bit of debt and no cash, but they do have investments. So we're going to pass on apps, although I do like it long term as a momentum play, and then just seeing if the company can continue to execute. ARCE. Okay, this one looks interesting. Look at this turnaround. Okay, so it's $12 stock. It looks like it's all-time low. Let's run the numbers on this. 392 million plus 5.7 million. Let's add cash, remove debt. Revenue used to be 159 million, 244, 380, 570, 1 bill, 1.2 bill, 1.7 bill, 1.8 bill. These are all Brazilian dollars, by the way, so keep that in mind. Okay, so cash. Let's do BRL to USD. Okay, so BRL, they have 204 million. So 204, 5912, 23. On 10. Okay. 1, 2, 3. Yep. Okay. So they have, how much cash is this? 1, 2, 3, 1, 2, 3. 42.5 million in cash. And total debt. Whoa, okay, that's a lot. I gotta add $1 million on top of that. So 1, 2, 3, 1, 2, 3. So 1, 2, 3, 1, 2, 3. Is that billion? I don't know. Did I capture that right? Total liabilities 3.8. Total assets 5.7. Yeah, this is billion. So let me just 1, 2, 3, 1, 2, 3, 1, 2, 3. Yep. Okay. 2 billion. Yep. So that's right. So that's represented as 1, 2, 3, 419 million. Wow. Minus 419. Uh-oh. 21 million left. Oh yeah. So this is divided by 37.18. Yeah, so this stock is very overvalued. We're going to pass on it. Air Transport something group. All right. Wow, looks pretty healthy. Look at these sales. We like to see this. Let's crunch some numbers here. So 2,060,000,000, 2,060,000,000 plus 166,800,000. Correct. And market cap is over 1 billion, so we are going to include it. So plus 1,400,000. All right, let's add cash, remove debt. Or is this USD? Yes. Cash 27 million plus 27. I have to do everything longhand because we have a mix of billions and millions. 27.313, yes. And debt is going to be 1 billion, okay. 1,464,920,000. Right there. And we're going to take this divided by 71,350,000. 71,350,000. $30 stock trading at $19. Not bad. It looks like momentum is slowly coming around. Money flow is slowly coming in. I like this one. Let's put it on our list. All right, that's a good one. Barnes Group. Is this Barnes and Noble? No, okay. All right. This one's in a really long, oh my gosh, really long bullish flag, maybe. I don't know. Let's crunch some numbers here. Okay, we have a mix of billions and millions here, so I do apologize. Wow, it's way overvalued currently. Do I even want to look at this one? I don't think I do. Sales are going down. Shares outstanding is flat. EPS is going down. We're going to pass on this one. All right, so we just looked at B. Now look at band, Battle, Bry, Cars, and CINT. I'll just load the rest of them. Why not? All right, let's give it a second for my computer to breathe. Give it a second to breathe. All right, band. I like to look at the bigger picture. Ooh, yes, this is a good cyclical one. If the company executes, they buy, institutions buy, we could see a big move. So what we could see here is a Elliott wave. So that's 1, 2, 3 ABC. So 1, 2, and then the longest move on Elliott wave is the number 3. So let's run the numbers here. I'm excited. Okay, so they make 579 mil, 6, plus they're profitable. We're going down. Let's not spoil anything for us. Cash, they have 113. Good for them. Plus 113.64. Minus total debt of 480. Ouch. Ouch, ouch, ouch. 80.86. Is their debt getting better? Oh my God, no. So they kind of took out this debt recently. They were debt-free for a while. That's fine. Okay, total liabilities, 657. Total assets, 959. But look what it used to be. It used to be 150 to 41. That's like a 4-to-1 ratio. So this is a potential really good turnaround stock, in my opinion. My opinion. The director bought some. Nothing from the CEO. Yeah. So, okay, whatever. Let's look at the revenue really quick. Revenue in 2016 was 152 million, 162, 204, 232, 343, 490, 573, 579. It's moving along very smoothly. Gross profit is moving up as well. Beautifully. Beautifully. Last year looks pretty good compared to this year, though. Net income looks like it's stabilizing. All right. Okay. Let's see. All right. The true test divided by 21.13. So this is $11.47 stock trading at $14. Kind of overvalued. Look at this though. Potential turnaround. Are institutions buying? BAND. Institutions own 86.99%. That's new data. Old data shows 79%. Is that a 10%? No, it's 7%. 7% increase. Look at this RSI. I like this one for a momentum U-turn turnaround. So one thing that's not being baked into the stock that I think is being overlooked by several people, besides institutions, I think institutions can see it because they're adding. But what I'm seeing here, you see this right here, they took a hit of 200 million. Look right here. Total debt, 200 million, now 484 million. They took a hit. They made, it looks like an investment, in my opinion. They made an investment in their company. Yeah. So, you know what? I got to get in this one. I got to get in this one for the long term. The downside here, let's talk about risk really quick for this one. The risk is, I mean, look at those sales. The sales are just chomping. 2023 is already at 579. So look here. We still have 4.5 months left of the year. And right now it's at 579. Is this, so let's see. 2020 to 2021 grew 150 million. From 2021 to 2022, it grew less than 100 million. This year, it's probably going to grow less than 100 million again. I mean, look at this long term. If you have time, this one looks really good. We're gonna keep banned. Banned current 14, fair is 11. Current stock price currently not accounting for 200, well now it's 400, so a 484 million investment. If they get a 10% return off that, I'm not even gonna, okay, let's keep it at where it is. Cyclical dip. All right, that's a good one. All right, let's move on to the next one. Battle. I'm gonna note that. Okay, battle. Wow, look at this. So they do 342 million in sales, and then their income supersedes their market cap. What the heck am I missing here? Look at their sales. Their sales look amazing. This is an $8 stock, by the way. Okay. It's turning around. Low float. All right, we gotta run the numbers on this one. All right, 342.6 plus 134 million.10. Add cash, remove debt. Plus 32.73. Whoops, 0.73. Total debt, I'm scared, 217 minus 217. All right, we got this. Let's just take a peek at their numbers. So they started capturing debt or capturing cash. Total assets 485, total liabilities 400. That's a little scary to me, but this company does look fairly new. Okay, total revenue 420 mil, 377 mil, 226, 224, 148. Okay, so they're bouncing back. They are bouncing the heck back. Net income is gradually getting better. It was good. Okay, it's kind of all over the place. Let's just get that. Gross profit. It's good. Yeah, 2023 is better than 2022. Okay, so this is looking good. All right, I like this company. I like this company. What am I missing here, though? Good. Balance sheet. Total debt. Their total debt is, wow, they're kind of all over the place, but not bad. Okay, so we have our numbers. Let's do this divided by 16.10. $18 stock trading at $8. And I think this could have legs if... I think this could have legs, period. Okay, so... This is a good one. Turning, okay. Wow. Okay, so this one could really, really move. What's going to have to happen is they're going to have to exceed sales for this year, which they are. Their sales for this year are so far 342 million. They have 4 months left. So let's see. 342 million divided by 6 months so far. So they're doing 57 million a month. So times 4. So 228 plus 342. They could get up to 570 million this year, which would be bananas. So we're going to watch this one. I like it. I hate to say that. I hate to say that, but I like it. Watch for Q1 2020. Q4. What is it? When do they do the Q4? No, watch for Q4 earnings for 2023 rev 590 million. Okay. Pretty, that's I'm adding some speculation, but I mean that's, you know, with some of the stocks that we had in my other video, you really had to trust that they were going to do what they were planning or do what the data was saying. Berry Corporation, holy cow, it's saying it's deathly undervalued. I'm not seeing a really optimistic long-term pattern here other than a turnaround right here, but I don't see any, like money flow is kind of turning up, RSI kind of. So let's run the numbers on this one. Wow, look at the sales. 918, what's it at now? It's got to be over $1 billion now. It's over $1 billion. It's over $1 billion. Okay. Okay, yeah, this one's looking good. Let's just see what the numbers are. So 1,080,000 plus 301.1. I gotta do longhand. 301.10. I do not add the market cap because it's not over $1 billion market cap yet. I'm not saying it's not gonna be though. Wow, so they doubled. They doubled. Oh, I mean, they're not gonna double from 900 million to 1.8 billion, but okay. Cash, they have plus 46,250,000. Debt, I'm sure they have a lot of debt. Total debt's not that much. Minus 395,740,000. All this divided by 74,600. Nope, 74,042. $13 stock trading at $7. It's undervalued. Look, you guys. You guys can see this, right? Double, pretty much. Shares outstanding, same. Did the share price double from 2021 to 2022? Oh yeah, it 5x'd. And it's, I mean, it's kind of in a bullish flag. Let's actually delete that. Let's get, whoops. Come on. Okay, so that's our so here's our flag pole, and then here's our flag, and then we see it go whoop whoop. Okay, let's just check on the institutional ownership here. I want to see over 100% institutional ownership. Oh yeah. Oh yeah. Wow. Okay. So we like this. I like this. I would get into all these stocks, honestly, so far. Okay, so BRY. Current is 723. Fair was like 14. Inst owns over 113%. Jesus. I mean, 7% dividend. Momentum, is it turning? Yes, momentum turning, money flow / RSI plus. Okay. Yeah, we like this one. Very cool. Let's go to the next one. Cars. This is Hertz, I think. No, cars.com. I did this one and I think it's overvalued. Yeah. We can see right here it's overvalued. Right here it's overvalued. Sales have been flat literally for the last 7 years, 6 years. Let's just go and check. So we're actually breaking out of a sales slump. So this year we're at 662 million. So this year it's looking good. But I mean, it's been pretty flat since 2016. That's 7 years. So what about their margins used to be better. Their margins used to be a lot better and a lot worse. Well, what's their debt like? Total debt is not as bad as it used to be. Insiders are only selling. Great. Total assets 1 bill, total liability 640. So pretty good gap there. Not bad, not bad. Yeah. I can't force myself to get into this one. So we're gonna pass on it. Sorry, everybody. It's too overvalued. CINT. Ooh, look at this. This is a bull flag, if you ask me. How do I don't want to curve. Where do I get a channel? I just want a channel. Just give me a channel. So basically, nothing has ever broken this. Ooh, look how close it's getting. It's getting ready to loop. Look at the power behind it right here. RSI, money flow, money's going in. Okay. This is a garden and pet company. Look at those sales in billions, you guys. Look at these EPS, strong EPS numbers. Okay. I mean, it used to be $7. We missed that, but let's see if this is a good price. Currently, it's fairly valued, but let's run the numbers. $3,260,000,000 in sales. Good for them. Positive net income of 113,000,000, 100,000, just 1,000. Market cap is over 1 billion, so we're going to add 2,020,000. 2,020,000,000. Yes. Add cash, remove debt. They have okay cash for what they have in terms of sales. So plus 177,440,000, correct, minus debt of 1,186,560. Yes. Okay. And while we're here, let's just check things out. Revenue went from 1.8 billion, 2 billion, 2.2, 2.3, 2.6, 3.3, 3.3, 3.2. Cost of revenue. So they have 4.5 months to kind of beat what they had last year. Based off of this current information, if we take 3,259 billion divided by 6 months, so they make 543. Okay, we're going to take that times 12. So they should end up with 6.5 billion this year, but that doesn't seem right. Yeah, I don't think that's right on my end. I think it's the I don't know. Let's look at this. Okay, gross profit's good. What are the margins on this? 28%, almost growth company esque. Net income is pretty solid. They used to have a lot of cash. Total assets 1.5 bill. Total liabilities 465. That's good. This is like a 3-to-1. Assets worth liabilities 3-to-1. Total debt. Wow, they picked up a lot of debt recently. I don't know why. Okay. Okay. I mean, it looks consistent, like healthy overall. So let's just finish our calc here. Crap. Our calc was this. Okay, so let's just do plus 0. Oh, come on, man. Okay, and then we're going to do... It's going to error out. So remember, okay, divided by 49,310,000. $88 stock trading at 39. I think this could really get some legs on it. I really think so. After this peaked, it was July 28th or July 2018 to August. It was a year of going down. Then March 2021 all the way to July 2022. So it's been over a year and almost a year and 6 months almost. Really consolidating right here. Look at this. Just solid consolidation right here. It's been bouncing between 35 and 39 for a while. So I like this one. This is a really good one. Okay. This is CINT current. Momo, RSI, money flow, plus. Okay. Very good one. Very good. Another CINT. Ooh, look at this. Look at this curl right here. Oh my gosh. That's a good curl. Wow, okay. What's going on here? Okay, let's get into it. So 480 million point 7 in sales plus 31.1. Okay. Cash. This is in Brazil, right? Yeah, BRL TUSD. Sweet. Okay. So cash, they have 127 million. So I gotta add 127, 123, 123. And in US dollars, that is 26.4 million dollars. Plus 26.4 minus total debt 974. 123, 123. Okay. 202 million point 8. So minus 2. Okay. And this divided by 19. Divided by 19.79. $16 stock trading at $6. And I think institutions are probably loading this one up. Let's find out. Institutions own 11%. Whoops. I think CNTY. This is it. So it's showing 89.16 here. Not quite. So they own 15 million shares out of 19 million available. So let's do some math on that. What is it? Okay, 15.07. So 19.79 minus 15.07 divided by 19.7. Did I do that right? I don't think I did that right. 15 million 0.07 divided by 19.79. Okay, so that's more accurate. Institutions own 76% of the float. This just looks like a huge curl up. This is looking good to me. What's the insider's situation? Let's look at the debt is increased. Revenue. Their margins don't look that good. Well, what is it? Gross margin, 34%. Gross profit, it's doing good. There's still 4 months left. Net income is killing it. I think we gotta, what does this company do? Okay. I think we gotta look at their clients. Okay. We're gonna definitely put this one on our list. Okay, so this 70, no, dang it. What was it? $16. Okay. CINT. Yeah, I mean, huge Momo, RSI, MFI swing. Yeah, this is a good one to potentially get on a reversal. So very nice. CMCO, is this Comcast? No, I think Comcast is CMCA. Wow, okay, heavy construction. Wow, good margins. Are they over $1 billion in sales now, revenue? They're not, but they are where they were last year, so they should get over $1 billion in sales. So let's see. Wow. Current prices were the same prices back in 2018. Okay, pretty rough. Okay. Yeah, let's run the numbers on this. EPS is working its way up. Sales is trying to turn around. Let's go ahead and crunch. So, all right, they have, okay, so 936.2, I have to do everything longhand. 936 million, yes. Should be zero. Plus 48,400,000, correct. Plus market cap is 1,200,000,000, yes, okay. And let's look at their cash. 133 million cash is good. Plus 133 million. And total debt is 471,590,000. All right. And while we're down here, let's just take a peek. Cash is pretty decent. Total assets is 1.6 bill. Total liabilities 8.6. So about a 2-to-1 ratio there, which is good. I like that. Total debt is historically high, but they paid it down from 511 to 471. So it's about a 40. They made a $40 million down. They brought it down $40 million, which is good. Total revenue is just growing. It got hit in 2021 pretty bad. Net income is steady. We like that. Gross profit is good. Okay, this is good. This is good. All right. And we're gonna do this divided by 27,940,000. $66 share price, currently trading at 44. It went down as far as 23, so it's up 100%. Getting in now, I don't want to. It might be chasing. I don't know. I feel like it might be chasing just a little bit. What's the institutions doing? It could be kind of a defensive move. Wow, institutions own 128%. Wow, up almost 30%, you guys. All right, I take it back. I like this one. Current is 41.3. Fair is 66. All right. Huge insider buys. Inst buy. Yeah, momentum, RSI, and money flow index are up. Okay. This would not be the first pick I buy, but it's up there. I mean, it's up there. So good for them. Century Casinos. I did a video on them. Just solely for them. Let's see what they're doing. Okay. So went from $1 to 16. Came back down, level set. Look at this. Money flow is creeping up. Momentum's creeping up. RSI is creeping up. I think we can see what's going on here. Sales are just doing great. Yeah. I mean, this month for July, they're already at 435 million for the year, and that's how much they made as far as last year, 2022. So it's gonna be a big year for them. So wow. Yeah. This is the same price you would have gotten in at 2014 levels. Ooh. 2004 levels as well. Well, 2005. So, wow. It's pretty crazy. Last time I had a huge MACD underbelly It went from, gosh, 49 cents to $10. Okay, let's see if this is worth it. Everything's a million, so I can just do shorthand. 435.9 mil plus 6.5. They have a ton of debt. That was a huge turnoff for me last time. They have cash, but plus 101.78 minus the total debt of, yeah, 635 negative. So yeah, total assets 884, total liabilities 740. COVID, did it hit them really hard? Like really, really hard? Cash. I mean, they've always been really tight on assets and liability. I mean, they used to be really good. Yeah, I got a little tight after COVID. Yeah, I mean, sales are going up. Gross profit is going to go up. Yeah. I mean, it's the momentum is here. I don't know if I could do it with all that debt. What are institutions doing? I'm gonna have to say they might be riding this wave. I mean, look at this. These, I mean, historically, like 2005 levels. Come on. All right, the old data said institutions own 73%. New data says 85%. So that's pretty big. BlackRock decreased. Vanguard increased. Fidelity small cap decrease. Different BlackRock funds increase, decrease, whatever. So I don't know. You guys can ride this momentum if you want. Yeah, I don't know. I don't know if it's for me, man. I don't really see any clear patterns, you know? Yeah, I don't really see any clear patterns. I don't know. I'm gonna pass on it, although it's probably gonna go up. I just can't. Okay, moving on. CPSI. Overall, $25 stock used to be 80. Looks like there's more downside, honestly. Yeah, a quick look at these numbers. 335.0 plus 10.6 minus debt, add cash. So plus 6.95 minus 139.3. Yeah, 213 divided by 13.8. So at $15 stock trading at $25, yeah, we're gonna pass. Ooh, look at this gap up. Did they get bought out? I don't know. Wow, look at this. EPS is just amazing. Sales, are they above 370 million? Almost. I mean, did we miss the boat? No, it says it's still got some more more juice in the tank. So let's run the numbers on this one to see what we've got going on. Looks kind of like the last one we just looked at. 367.5 plus 33.7. All right. Cash they have plus 1.17, pretty low. Total debt, nope, minus 595. Yeah. Okay, this is nope. We're passing on this one. This is DGI. Okay. This one's going all-time highs. It was $6. Now it's quite a bit more. So let's run the numbers. 429.7 plus 27 mil. Crap. We gotta do longhand. 1,490,000. Because that's the market cap plus 27 million. Plus 429,700,000. Correct. Let's add cash, remove dates. So plus 34,900,000 minus total debt, not that much, 237,970,000. And this is gonna be divided by 34,540,000. $50 stock trading at 41, not bad. I mean, this is just consistent, beautiful. Let's see. Wow. It's hot. It's really hot. So 2016, they've basically doubled from 2016 to 2023. Yeah, I mean, the stock has quadrupled, so it's a little too hot for me, honestly. I feel like I missed the boat on this one by quite a bit. 2018 would have been the game right here, or that dip, the COVID dip, but you can't really predict that. So yeah. All I can say is, when we see stocks that are gradually growing like this, we got to jump on them if they're good and, they run really well. So we missed the boat on this one. We're going to pass. DLX. Ooh, cyclical low. Okay. Ooh, it's showing it's undervalued. It's advertising agency. Ooh, sales are stepping back up. Okay, I'm very excited. I'm very, 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 very excited. I'm going to make the calculator skinnier. Okay. All right, it's going to be a mix of millions and billions. So 2,230,000. Yep. Plus 58,500,000. Add cash, remove debt. Plus 40,040,000. Yes. Minus. They got big debt. They're at ad agency. Minus 1,672,610. Yes. And let's just look at the numbers here. Cash is, there's no big pattern here. Total assets is 3 billion. Total liabilities 2.4 billion. That's a little scary. It's about a $600 million gap historically. 500. That's okay. So the gap is widening again. So that's good. Last year was a little bit tighter. Total debt is decreasing from last year. So I think maybe they may have taken on debt to enhance their business. I don't know. No selling. That's fine. Let's look at revenues. 1.8 billion in 2016, 1.9 billion in 2017, 1.9 billion in 2018, 2 billion 2019, 1.7 billion 2020, 2 billion 2021, 2.2 billion 2022, 2.2 billion in 2023, trailing 12 months. So they have some time to get back up above that. Is this trading below 2019-20? Oh my God. This is a screaming value. I think. Profits 1.1, 1.2, 1.2, 1.1, 1.0, 1.1, 1.2, 1.2 almost. Net income gradually getting better. All right. This looks great. This looks fantastic. This looks really fantastic. Good for them. I think they are. I think they're getting out of this. Yeah, look at this. I think institutions probably own over 100%. So we're going to take this divided by 42,970,000. $15 stock, trading at $18, so it's a little overvalued, but I think it's not accounting for growth. And then also we have the technicals here. I think the technicals actually started moving already. So the last time it was this low was 2012. Definitely doing better since 2012. I'm going to guess institutions own over 100%. BLX. Am I right? I got to do math. So institutions own 43.6 million. Yeah. You see that? Institutions own 43.6 million shares. There's only 42.9 here, so it's over 100% now. Let's just see what's going on. Vanguard added. BlackRock, nothing right there. This show Vanguard decreased here on the 14th, which was Friday. So, I mean, yeah. This is a cyclical opportunity in my opinion. Wow, look at this. Just keeps going. Wow. Whoa. We're going to do something very crazy. Call me crazy. Call me crazy. Okay. So watch this. Okay, here's the... I gotta make sure I'm not... Look at how close it is to hitting this all-time support. Look at that. How freaking nuts. And then if we go... I gotta do this all over again. One sec. We go here to the highest peak. To the highest peak. Probably like right there. Wow. I think we can get it to touch. Let's get... Did I just move that? Damn it. Can I go back? Shoot. There we go. Okay. Let's move this a little... I want to touch that. There we go. Okay. Wow. Okay. Pretty crazy. So realistically, we'd kind of want it to come down and bounce off of this line. What are the odds that it comes down and touches this long-term support? Gosh, I mean, it's about a 50% move down. I don't know if we'll get a 50% move down on this. So, man. What do they do in sales? They do 2.2 billion in sales. They have a 6% dividend. I mean, they've turned the business around so much. I just don't... I think, yeah, I would feel okay getting in here. Because it's going to continue to go. Because I think we've hit... Yeah. I gotta track this one. DLX, current 18, fair is 15, cyclical dip to historical lows, Momo, RSI, MFI, up. Okay. Yeah. I like this one. Not the best one we've seen so far, but it's a good candidate. So that was all of them. There's 5 pages. I think I'm going to spare you guys and make just 5 different videos. So this was part 1. Part 2 is coming out. I'm going to do it now, but it'll be released probably in a few days after this one. So if you guys made it this far, please consider hitting the like button, and I hope you're doing well. Or hit the subscribe button if you made it this far. Seriously. Take care. Bye.